Now we have joining us in studio this afternoon Charles Nyandia, who is going to be talking to us about empowering cooperatives through the digital space. All right, so Charles is of course the CEO of Salvan Africa Limited. Welcome, Charles. Happy to have you on Business Today.
Thank you, Malika.
Now, empowering cooperatives by penetrating technology to make them more competitive seems to be your area of focus. And, you know, credit is affordable now, but SACCOs have not managed to improve on customer experience. So I want to start off by asking you, what are the major challenges that SACCOs face?
Okay, thank you for the invitation, Malika. Number one, we have a very great interest in the cooperative sector in Kenya because of its potential, especially in capturing and solving the needs of Kenyans, especially when it comes to access of affordable credit. However, it has not been the case in as much as they would be expected to be that way, because there are other players in the sector who are doing even better. Despite the credit not becoming cheaper, we have neglected SACCOs, and there are challenges, like you're saying, which have made it not possible for them to match up. Number one, we have been able to identify through our exposure with SACCOs in dealing with them and consulting that they cannot be able to afford credit and they cannot be able to meet the needs of clients, which are changing every day. And therefore, we decided we need to come up with something which can also be able to bring the whole scope of even people in Kenya who have also changed from savings
Yes.
and they're just looking forward to borrow and borrow and borrow. So what is this that is really happening to SACCOs such that they are not able to do that? We are tackling the challenges now as far as that is concerned.
Well, then, in that case, what role does technology play in the solutions that you want to offer them?
Number one, which is a very key differentiator when it comes to any corporate performance, is customer experience. How well do you suit the needs of your customers? Clients are more oriented these days towards use of mobile and convenience. They want to access their money from wherever they are. And as such, mobile becomes very key. So we are coming to tell SACCOs, in as much as they may not afford expensive systems for them to offer to their members that solution, we can be able to give them and also train them. Because another risk, or rather another problem which is there, is that people take technology solutions to come and replace business, but that's not the fact. Systems should come so that they can streamline your operations and your business, so that at the end of the day, the member will be satisfied. So we come in so that we can be able to provide solutions in a very affordable way. We also train them so that they can be able to use the solution in a more reliable way.
Now, you talk about affordability, of course, being one of the key factors involved in the situation.
Yes.
How affordable are we making these technologies?
Number one, we are making it possible to acquire the system without actually checking out a lot of money when beginning, such that we adopt the pay-as-you-go plan, whereby we put the system, even actually you don't pay even a single coin. We begin a journey where, as you proceed and as you get the good experience from the system, we also benefit in one way or another by just having something small for sustainability. So our focus is to the masses, to the numbers of the so many SACCOs that you have in Kenya, without looking at how much they can be able to carve so that they can afford the system. So basically that's what we are doing. Something else which we are doing in a big way, like I've mentioned to you, is to tell people that there are opportunities. And we have vehicles and we have channels for us to save and get affordable loans. We realize, in as much as credit has really moved down to the common man, life is not really changing, because people don't have, they have not built the capacity for savings, so they can now use the pooled savings for their own benefit. However, they just want the small money they are buying here, they are borrowing here and there, which is sometimes actually expensive, and at the end of the day, they fail to see, or rather to benefit from SACCOs. Yes. So there's another very big problem, Malika, which SACCOs are having, which is default rates. People just borrow and they don't pay back. It's caused by, of course, so many reasons. And part of it is, of course, lack of capacity when it comes to credit business, because you have to follow procedures and standards that are normally followed so that you can be able to give someone credit within their limits. And it comes because we just feel we just give people money simply because they have asked for it, not because they can afford to pay back. Our systems which you are providing, they come with a mechanism of automatically detecting and telling you how your member is in terms of credit profiling, so that by the moment they borrow, they can be able to pay because it's within their ability to pay. Then, of course, when people fail to pay, you can't avoid the problem of cash flows, such that now SACCOs get themselves in a place where they can be able to give more credit because money is stuck outside there. If SACCOs can be able to adopt the model of small loans to members, which is actually very relevant in Kenya, because people want to take some money out of their savings, they buy stock today in Gekomba, they pay back, and then they borrow again. So that's the concept, that's the ideology that you want to tell SACCOs they can adopt, and they can be able now to avoid getting themselves into a default risk region.
All right. Thank you very much, Charles Nyandia, for joining us and elaborating on the types of measures that SACCOs can take in order to become more competitive in the digital space and further on. Now, that is the CEO of Selvon Africa Limited, Charles Nyandia, joining us on Business Today this afternoon. Thank you very much. And